Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back to yet another episode, and it's a special episode because, as you can tell, as you can tell if you're watching the video feed of this. True. Well, it probably sounds a little bit different anyway.
Yes, true.
Yeah, we are live in studio in Melbourne. And I've got my good friend here with me. Hamish, what's going on, mate?
I'm doing well. This always throws me off when we do that. Like, these episodes are so fun to do because it's so easy. Like, we're in person, there's no lag, but it always throws me off a little bit. It always takes me a little bit to get like settled in. I'm like, there's monitors over here, there's a camera there. Yep. You're here. Normally I just get to look at a wall, you know?
It feels like the stakes are higher. I don't know why, but this is the same as usual.
Yeah, exactly. We can still cut it if if we make mistakes.
If we make a mistake. Hamish, if you fart on air, we can just...
Yeah, exactly.
Normally we can't hear that.
Yeah.
No Lucy to deal with today.
True.
No delivery dog barking.
Yeah, no one's going to be scratching at the door, so yeah.
How you going, mate?
I'm doing well, yeah. I just came off a weekend away, actually, so I'm still in like recovery mode, but but I'm feeling good, yeah.
Yeah, fair enough.
When's the last time we did one of these in-person ones? I feel like I say this every time, but it's been...
I can't remember. My memory is very bad.
It would have been the US trip, I think, probably earlier in the year. It would be my guess, unless we did one in between. But
did we do one in person before we left? Because we didn't do one in America this year.
Yeah, we did one. Oh, true. Yeah, maybe we didn't even do one.
Maybe it goes back to the previous American
trip.
That's.
Oh no! All right, let's not talk about that. Anyway, what are we talking about today?
We are here and we are doing it now. So we are going to be talking about. Well, we spoke about the Paris Olympics last week and how the ticket sales and that kind of stuff is maybe not going as well. Well, now we've got some interesting stats and some information out of the airlines about travel to and from Paris, which is actually pretty interesting.
Okay.
Because it's probably not what you would expect. And I'm also going to be talking about Trump, what he said recently, if he's elected, what he's going to do with the US's stance on Bitcoin, which is quite interesting.
Okay.
Yeah. So we'll talk about that. I'll hold that until later. But what have you been?
And I'm going to talk about two of my favorite things: food delivery fees and bonds. So yeah, I picked two of my top 5 favorite things.
Wow,
you know?
Nice.
Yeah. So yeah,
you can tell that you lead a very interesting life, Hamish.
Yes. Thank you.
Food delivery and bonds. You just research bonds all day, and then once you get to the end of the day, you order some Uber Eats, and then you do it all again.
Yeah. We don't have ads this time. Oh, yeah. That's one of my other top 5 favorite things. Is ads. You know?
Ads.
Yeah. We love ads.
Do we?
Yeah, we do love ads. And with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings. And manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
You've got that down so well at this point. I was just like reading along as you were reading that. Oh gosh, you've got that absolutely down pat.
Yeah, I've got the cadence of that.
Yeah. It's like your mouth just knows what to do. It's just every word is perfect. All right, Hamish, let's start in Paris, shall we?
Yeah.
You've been watching the Olympics?
No, has it started?
Me neither.
I watched it.
Hasn't started.
I'm just kidding. I watched a little bit of the opening ceremony highlights, but that is all that I've seen of the Olympics. Yep. Yeah, I'm not a big Olympics watcher, to be honest. I'll watch a little bit. I'll watch the highlights of like the athletics. I think I said this last week of like the track.
Yeah.
Maybe a bit of the swimming for the Australians. You know, we kind of get into the swimming, but that's it. No. Yeah.
Yeah. What do you think of the opening ceremony?
It's interesting.
Yeah,
we'll leave it at that.
Yeah. I feel bad for him.
Yeah.
When you're hosting an outdoor kind of opening ceremony and then it starts raining, it's just like, oh.
Yeah. I thought the torch lighting thing was really cool.
Yeah?
Yeah, that was really cool.
Have you seen some of the backlash of people just like posting TikToks and stuff afterwards that were there that were like, we paid how much for these tickets? And then they're like sitting there in the rain. And there's a good one of like, there's this amazing light show on the Eiffel Tower.
Yeah.
But it's only facing one direction. And the reason it looks so amazing is because the camera, which is filming it, is so smack bang front and center.
Yeah.
But as soon as you're off to the side, these guys were on one of the side faces of the Eiffel Tower, and it just didn't look like a light show at all. It just looked like the Eiffel Tower was changing colors every now and again.
Jeez, yeah.
They walked away and they were like, how much do we pay for these tickets? Are you kidding me?
Yeah, the weather's not been good. That actually reminded me. I did see some of the cycling because so many people were it was pouring rain and so many of them were just sliding and stacking.
Just flat. There's a great one with the commentator's curse going out there where it's like, and she's bounced back after she had a horrific crash back. And then as soon as like they start talking about it, she's stacked straight down. Oh, she's done it again.
No, last corner. Oh, nope.
I shouldn't laugh, but the commentator's curse is just so funny sometimes.
Yeah.
Anyway, Hamish, back to what we should be talking about. Tourism to Paris is going up or down? What do you think? Surely going up, right?
Well, I know the story. So it's going down.
It's going down. It is. That's anticlimactic. All right. So anyway, moving on to the next news story. I like this article. Was it the Parisians who bluntly told travelers do not come to the summer games? Or did sky-high prices for hotel rooms, house rentals, and event tickets turn travelers away? For a multitude of reasons, many people, including residents, are avoiding Paris this summer, despite prognostications that a travel boom was all but assured. It's a common misconception that host cities see an explosion of travelers around the Olympic Games, said John Grant, chief analyst at the aviation intelligence company OAG. Quote, the phenomena of the Olympics is that the local market doesn't travel, he said. Plus, the regular business traveller who would normally be travelling during that moment in time stops and just stays at home. And they note that in London, Athens, and Atlanta all saw a drop in summer visitors when they hosted the Summer Games. Quote, it just never quite achieves and delivers what's expected, he said. So I think it's an interesting dynamic because it's kind of like what we were talking about previously. It's with the ticket sales being down. It's something that almost people they think it's going to be such a massive thing that they're like, oh, we better not go. Like that's gonna be hell. And then because everyone's kind of thinking that, then the opposite happens when not that many people are actually there. I watched a video on this specific thing as well, and it's really interesting because specifically for cities that are maybe not popular tourist destinations, it's even worse because they think that it's going to bring attention to their city. But often it just shows some of the not so nice aspects of their city. And that's happened a bunch of times with previous Olympics where it's actually just made people go, oh, okay, yeah, let's not go there. And so it was surprising to me to hear this though, because you would think, oh, they're having the Olympics. It's, bringing, attention to the city. And therefore, you're going to get this huge influx of travel. But probably the biggest thing that I've taken away that I've learnt about Paris from this whole Olympic campaign is just how dirty their river is.
That's been about 90% of it. It's a sewage river.
I thought that, Paris was this lovely place, beautiful, like nice greenery, obviously nice landmarks and architecture and cafes and whatnot. And now I just know that their river is full of crap.
Yeah.
Did you see they tested it the other day and to see whether they could swim in it for the events, and they found 9 times the safe level of E. coli. So
great. Wait, so are they still doing swimming events in the...
Well, they say it's dropping rapidly because I think one of the problems was that because it rained, it kind of pushed more water runoff into the river. But yeah, I think they're going to keep testing. But I don't know what their plan B is, but fingers crossed.
It's going to be a biathlon, not a triathlon, I think, this year.
Oh dear. But back on the story, Hamish, what's interesting about this whole tourism thing is that we've actually got some financial data or financial predictions from airlines around France, which I think is really interesting. So the article notes here, big losses at key airlines Air France KLM on Thursday announced the company is anticipating a third quarter hit to its unit revenues of 150 to 170 million euros. They know that's 163 to 184 million dollars because of lackluster demand to visit Paris this summer.
Wow, that's crazy.
Yeah, that's a big hit. It's crazy. Air France flagged problems earlier this month, announcing on July 1st that traffic to and from Paris was lagging behind other major European cities. Not only was interest down, but, quote, international markets show a significant avoidance of Paris, the company stated.
Wow. There you go.
People
Steer clear.
Yeah, they're not going. Similarly, Delta Airlines is also projecting a big hit, upwards of 100 million in revenue, because of a drop of travel volume to France as a direct result of the Summer Games. Quote, unless you're going to the Olympics, people aren't going to Paris, CEO Ed Bastian told CNBC. In its June tourism barometer, Paris Tourism Board projected a drop in international air arrivals across all markets during the lead up to the Olympic Games, down 8% in June and nearly 15% in July compared to 2023.
Wow.
Yeah, it's pretty hectic. The tourism board is also expecting an 11% increase in arrivals during the games, spurred by visitors from Europe, plus 24%, and North America, plus 15%, but offset by sharp drops in arrivals from the Middle East, negative 42%, and Oceania, negative 30%.
Wow. There you go. I mean, it's no surprise no one wants to host the Olympics anymore.
Exactly.
Because even every time it comes around, there's just so much press. Like, all of this information has got to be putting off so many countries from wanting to do it. Because, like, what's the positive that's come out of Paris Olympics this year so far? Like, at least so far, I haven't heard a single positive headline about it.
Yeah.
It's like poop water, like no tourism, like spending $10 billion, I think they're spending on the Olympics in total.
Yeah. It's odd. It's just odd. And a quote which I don't think I've included here, but what they were saying is that the fundamental problem with tourism to the Olympics is the Olympics isn't itself the top level of a lot of popular sports. So it's kind of like it's like a collection of lots of sports that people don't really follow, and the sports that people do really follow, it's not the top level.
True.
So, for example, it's not the top level of
like basketball,
for example. So people would probably prefer to see NBA over seeing the Olympics basketball.
Yes. Yeah.
And there are a couple of other good examples of that kind of effect playing out, where it's just like, okay, if a cyclist, they could win Olympic gold and that's great, but it's not the Tour de France.
Yeah.
So people interested in that sport are more likely to go and watch the Tour de France as opposed to watching the Olympics.
Yeah, I never thought about that actually. Yeah, that's actually true.
It's an interesting effect. Yeah, I hadn't thought about it, but it makes sense. Like if you're a basketball fan and you're going to travel all the way to Paris to watch America play, probably not.
Yeah, with all the best players to compete against.
Maybe if you're like a hardcore neutral basketball fan, it'd be cool just to see that American team play.
Yeah.
But apart from that, most people just follow a team in the NBA and they'll go to their games. They probably prefer to go see
Olympic
Lakers.
basketball is not that exciting just because America has all the best players. And usually no one else is very competitive. There's some competition, but not in a meaningful way.
Do you follow basketball?
Not in a huge way anymore. I used to. Yeah.
I was trying to think how many countries' Olympic teams could be filled by NBA players. I don't think there's too many. Canada, the US, Australia, I think can be filled. Not that they are filled by NBA players, but I think they could be filled. But I don't think my friend was saying maybe Spain could be. Yeah. But I don't know anything about basketball. But I was like maybe even close geographically, like Mexico. But apparently there's just not very many Mexicans that play in the NBA.
Yeah, I think that's just about it. Argentina, I think, has a few.
Right.
But no, not really.
Which is interesting.
Yeah.
But anyway, back on track. So that's kind of the data around the flights around Paris. But what about hotels and Airbnbs? There's some stats there too. It says here, hotels too are feeling the pinch of Paris's summer slowdown, with occupancy rates expected to drop 60% in early July, down some 10 points from 2023, according to Paris's tourism board. Like the airlines, many hotels raised rates to take advantage of the tourism bump, only to discount them following a spring season of slow bookings. Still, average rates are up nearly 70% this July, from €202 last year to €342 during the Olympic period, Paris Tourism Board said. Estimates from the travel price comparison website Trivago show rates have jumped even more, up 85% year on year in Paris and 131% in, how do you say it, Lille, I think.
No idea.
I'm not quite sure. Which is hosting some of the game's basketball and handballs competitions. Airbnb hosts are also cutting rates, some by more than 50%. A 2-bedroom loft near the Notre Dame slashed its nightly rate from $1,407 to $683 during the first week of the games, which is lower than its nightly rate in the fall. So that's like lower than normal.
Yeah, jeez.
Which is wild.
Oh.
Airbnb said listings in Paris reached all-time high this summer as enterprising Parisians jumped at the chance to simultaneously escape the crowds and cash in on the sports tourist propensity spend. So that's quite interesting. The listings are up because all the Parisians, all the locals are like, we can maybe leave Paris during this busy time and we could get paid to do so.
True.
So they're just like buggering off.
Yeah. See ya. Tourism everywhere else goes up.
Yeah, exactly. That's so funny.
Yeah.
That's going to be the new effect. Like, Paris is hosting the Olympics and all the countries around Paris are like, yes, this is great for us.
Quick, get out.
What else have I got to say? Airbnb told CNBC that tens of thousands of people in host cities had opened their homes for the first time, but the company declined to say the number of listings that remained unbooked during the games, instead telling CNBC Travel that the Olympic Games Paris 2024 is set to be the biggest hosting event in Airbnb's history, with more guests staying in local homes on our platform than at any event ever before. Airbnb also said domestic interest for stays during the games has never been higher. I don't know if I believe that. Yeah. In the weeks leading up to the Paris Games. So there you go. Some mixed results in terms of hotels, but it is certainly not the situation that I expected, where all the flights would be booked, all the tickets would be super expensive, tickets would be flying out the door, hotels just booked to their maxes.
You'd think it'd be like the F1. Like when the F1 comes to Melbourne, it's just crazy. Like accommodation is just impossible to find. You'd think it would surely be like that, but
yeah, some of the people that list around Albert Park for the F1 put their places up for literally more than $10,000 for the weekend.
It's crazy.
Yeah,
insane.
Yeah, which is, I don't know how many of them get booked, but sometimes the worst one I've seen is an Airbnb for the weekend of the Grand Prix right next to Albert Park, going for 52,000 Australian dollars. I don't know if anyone actually booked it, but that's what they listed it for.
Which full booked that.
Yeah. But then again, F1 is such a money sport where it wouldn't surprise me if there's some like rich Italian Ferrari fan that's like, would you like to go to Australia for the weekend? 52,000. That's cheap. I think that's low. That's what a loaf of bread costs these days, doesn't it? It's completely washed. Yeah. Anyway, Hamish, so that is an interesting follow-up on the Paris Games.
Yeah. How long do the Olympics go for?
I think it's like 2 or 3 weeks.
Okay. So it's pretty short, actually.
Yeah. I'll look up when the closing ceremony is. And the closing ceremony is, give me a date, please. Date is the 11th of August.
Okay. So
we've got another couple of weeks. Yeah. There you go. That's not long.
Not long at all.
The amount of dough spent, how much money is that per day?
How much money? Yeah.
Many billions.
Too much.
Many billions per day.
Much. Speaking of too much money being made, I was trying to transition that as best I could. Let's talk about food delivery fees.
Okay.
I'm sure. I think we've both noticed that delivery fees have gotten a lot more expensive. And me, as an avid food delivery consumer, I'm very
introvert.
angry about it. Yeah, exactly. Someone who doesn't want to leave my house. I want someone to leave my food on my doorstep. Why is it getting more expensive? No, but I found an interesting story talking about just some of the changes, some of the sneaky changes that some of these companies have kind of gone through. Some of them that we can see through the app, I'm sure, service fees and that sort of thing. But some of these companies are getting quite crafty about how they're starting to make money.
Right.
Because, Okay, so when these apps launched, I actually don't know. When do you reckon Uber Eats launched? Like it would have been probably 2016, 2018, maybe around that time.
Yep. I'm guessing 2018 in Australia.
Yeah.
Because I remember I was still working as a physio and I remember my coworkers being very excited. So I reckon 2017, 2018, sometime around there.
Yeah. And when they launched, how good were they? Right? Like, I feel like you went, at least for me, I was like, this is crazy. I mean, the food is basically, it was pretty similarly priced to like what you would pay if you just went and picked it up. And then it was like a $1 to $3 delivery fee.
Right.
I don't know.
Well, I wasn't a huge, I took a while to catch
so you're
on.
not a sucker like me. Yeah,
Nah. But plenty of because I was still caught in that mentality. Like my parents are very much the mentality, why would you ever pay for delivery when you can go and get it yourself?
Yeah.
And I think
you're talking too much sense, okay?
Yeah, no, I think, I think there's definitely a market, obviously, for having things delivered to you and the convenience factor. But just during my childhood, that was never put in my brain. The complete opposite was put in my brain. So I kind of just adopted that. Even when we used to order Uber Eats, we would try and see if I could do pickup to escape the $2, $3, $4 delivery fee. And I'd just go pick it up from the local shops.
You're a better man than I am, okay?
No, but I definitely people, it's fine. Like convenience factor's a thing for sure. It's just something that didn't click with me.
Yeah, for sure.
But a lot of my friends were using Uber Eats in the early days.
Yeah. And so, it was a very good deal. I think, when it started out and, delivery apps are obviously hugely popular. According to Techomics 2024 Delivery and Takeout Consumer Trend Report, the share of consumers choosing third-party apps over direct restaurant delivery has risen from 15% in 2020 to 21% in 2024. So no surprise, the amount of people who are using delivery apps, particularly over kind of just calling up your pizza place and getting them to use their delivery drivers, is rising in a meaningful way.
I'm trying to do this silently
as
I pour a glass of water and give it over to Hamish. I'm trying to not make much noise.
Thanks for that. But there's a little problem.
Yeah,
there's a little problem with the golden age of food delivery, of the food delivery apps, right?
So because it can't last forever.
No, yeah. Look, there's this little problem about the business needs to make money.
So what I said, but in a more roundabout way.
Exactly. And so, I mean, for a few years there, we kind of got to live in this kind of golden age of delivery apps. But it's such a tough business to be profitable. First of all, just because restaurants are tough businesses to run profitably in of itself.
Yeah.
It's a very low margin business. And now with the delivery app, you're adding a driver who needs to get paid and the delivery app who has to make money as well. And then, we've been in a cost of living crisis. I don't know. That's also something that's been happening. And so you have restaurants that are grappling with kind of higher food costs and higher labor costs. And so they've already been having to just raise their in-store prices. And so once that gets kind of pushed to delivery apps with the, 30% surcharge that Uber is charging, all of a sudden you're looking at, if you, go on Uber Eats now, you go on DoorDash now, the prices are actually insane.
It's one of those things where it's such a small, it's such an everyday purchase that you don't want to spend I think there is a ceiling. Because you're not going out to a fancy restaurant with your friends. You're just ordering food. So I think there's a natural ceiling on how much people are willing to spend, even plus the convenience of it being brought to you, before you just say, nah, that's too much.
Yeah.
If Uber and these companies were going to make a healthy profit margin, be profitable, make a healthy profit margin, and they're going to pay the drivers completely fairly, I mean, you'd probably be paying $50 to $60 for a meal.
Yeah.
That's just takeaway, fish and chips delivered to your doorstep, which it would cost you maybe $20 if you just went there and picked it up.
Yeah.
So I just think there's naturally a limit where it can't get too expensive. Otherwise, people will literally just be like, nah, I'm not doing that.
Yeah. And I think for a lot of people, it definitely is there. I mean, there's been times where, the one thing that I'll never order on, or that I'll very rarely order on Uber Eats would be sushi. Because I don't know if it's just my area, but I put sushi in there, it'll be two little kind of trays of sushi and it'll be $70. And I'm like, How did we get to 70? Like, where's the maths in this? And so for some restaurants, they've just, I guess the sushi places just decided that's the only way we can do it is we have to put the price up so high, and then people just don't order it, or you just go and you go and pick it up.
Yep.
But yeah, prices have been getting out of control. I took a look at the June CPI release out of the US, and food away from home has been one of the worst categories, even in 2024. It increased 4.1% year over year. So while broad US inflation, I think is 3%, I think is kind of the headline figure. Food away from home has continued to has continued to rise well above the kind of average inflation figure, and is contributing in a meaningful way to that overall figure, because food is kind of one of the larger categories.
Yeah, definitely. People can't avoid eating food.
Yeah, exactly right. Not yet.
I mean, you can try.
Yeah, you could do it for some period of time.
You probably get away with it for a month.
A month, actually.
Yeah, because, I think you can. Well, I think it depends because, theoretically, you die from not having water before you die from not eating food.
Yeah,
but I think if you've got like a healthy amount of fat on you, you can probably last. I think you can last like a month before.
Wait, so I only have to order Uber Eats once a month?
Once a month, technically.
Oh.
I think
it's not so bad then.
I think you'd be in a bad way if you're just eating once a month. But no, I think dying of starvation takes a long time because your body starts eating itself.
Right.
Because you've got so much like muscle tissue that your body can start eating if it needs to.
Okay. Then what are we complaining about?
I don't know, mate.
Let's just finish this story up. No. But of course, a large part of the reason why the kind of these delivery prices have gotten insane is because of the fees. And that's what I wanted to talk about, which is companies getting really sneaky about how they charge fees and the way they talk about what happens with their fees, and the way they're kind of doing some sneaky stuff so that publicly they can say, that they're doing one thing while they're actually doing something else.
Right.
And I found this really fascinating. So again, when these apps launched, 2016, 2018, I don't know exactly when it was, the way that these apps made money, like Uber, was pretty simple, right? So Uber, for example, would take 30% of the order value from the restaurant.
Right.
And then there was a delivery fee that went 100% to the driver. And so, and for DoorDash, I think it was like 15% was their kind of surcharge to the restaurant. But it was pretty simple, right? They just took a share of the total order value from the restaurant. And then the delivery fee went to the delivery driver.
But then, so in the early days, Uber was making nothing?
Well, they were collecting the share from the order value, right? So they're taking their 30%.
Yeah, but didn't you just say all of that just went straight to the driver?
No. So the order value of the food, so like let's say you ordered some McDonald's for $30, Uber would be taking 30% of that $30 order value. Mm-hmm. And then of course you would pay a $5 delivery fee on top, and that $5 would then go to the driver.
Okay. Yeah, makes sense.
When you got to the kind of the checkout, you would kind of pick all your items. The fees section would just be for the driver. And then Uber would be taking out of the actual price of the food.
Yep.
So it was very simple. Today, I'm sure if anyone's kind of been using these apps, it's a lot more complicated.
It's like 5 fees now. Actually.
Exactly. So, of course, Uber, DoorDash, Grubhub in the US, they still take a percentage share of the order value from the restaurant. It's still the same. Uber takes 30%. DoorDash takes, I think it's between 15 and 30%, depending on the deal that they kind of have with the restaurant. But now Uber, Grubhub, and DoorDash all have delivery fees and service fees. Yep. So the delivery fee still goes to the driver for all of these apps. Grubhub and DoorDash say that the new service fee covers the cost of operating the platform, which is just interesting because it also just means they've just created a new revenue stream. I mean, they were already taking 30% from the restaurant, which you would think was to cover the operations of their business, but now they got a service fee as well.
Right,
okay. So they've just added that on top.
Yep.
But what Uber does is really, really sneaky. So Uber says that they only keep 10 cents of the service fee and that the rest of the service fee goes to the driver. Right, so Uber's split their fees as well. You would have noticed they have the delivery fee and they have a service fee. And in my mind, it would have worked the exact same way as DoorDash and Grubhub, which is the delivery fee goes to the driver and the service fee goes to the app. That's not what Uber says. Uber says they only keep 10 cents. And that sounds generous, right?
Yep.
Look at Uber.
Yeah.
How good is Uber?
10 cents. Wow.
What an amazing company. Everything goes to the driver. The restaurants are great.
Man, their stock's going up.
Yeah, exactly. Well, it's a little bit sneaky. So what they've done now is technically that is true. Technically, they only keep 10 cents of those fees. So those fees go to the driver, but now they charge the driver's fees. So they have kind of a back-end relationship with the driver where they're charging them for various services and various support services. And
How are they charging the driver?
Why I think this is actually insane is because it actually allows them to publicly say that the fees you see in the app are going to the driver.
Yeah.
While still basically taking that fee, they're just taking it from the driver, and that's not in our kind of relationship. Like it's between the driver and the app. And those fees are very there's not much clarity on what those fees are. They're very there was nothing in the article that kind of spoke about them, which is what I thought was really, really sneaky, because it's kind of, they've re-engineered how they do their fees so that they can say publicly, yeah, we only take 10 cents. We take 10 cents.
We are so nice.
We're so good.
Gosh, everybody should get behind us.
Yeah.
That is crazy. They charge their drivers, so they pay their drivers.
Yes.
And they charge their drivers a fee.
Yeah. So I'm guessing they have probably some various platforms. Maybe there's different levels of insurance and that sort of thing. I don't know. I don't know exactly what the different kind of fees they charge are.
Yep.
But they've kind of set things up in a similar way to, I guess, how McDonald's operates as well with their franchisees.
Yeah, that's what I was going to say.
Have
sounds franchisey.
They're kind of, McDonald's corporate has a relationship with the franchisee, and they kind of sell them all of the service of the machines, and they sell them all of the lettuce and burger buns and all of that stuff. But I just thought it was really sneaky because, it allows them to publicly say, we only take 10 cents of the fees.
That's crazy.
But you don't really.
That's wild.
Yeah.
Very, very sneaky, Hamish. Very sneaky indeed. That blows. It is the franchise model now. That's what it is.
It is.
You can join up with us and you can make money from being our driver, but you're going to have to pay a driver's fee to us.
Yep.
And that's going to be high, and you're probably not going to make any money, all things considered.
Yeah, but that's okay.
Yeah. Wow, there you go, hey? Is that the story?
That's the story, yeah.
That's pretty insane, dude. They're sneaky because I remember when they split the fees, the delivery fee and the service fee, they would make it so that each fee was roughly half-ish of what the delivery fee used to be. So you didn't actually notice a change of prices.
Yeah.
It's smart if you can split it, because then you can slowly raise both of them, and people probably won't notice.
Yeah.
Very, very sneaky. Well, there you go, Hamish. Bad luck. Your meal's going to get more expensive.
Yeah, shame.
Yeah, it's a shame. Does Uber make any money? Have they turned a profit once ever? I don't think so, right?
So Uber, the rideshare app, is profitable.
Oh,
and
okay.
they also claim that Uber Eats is profitable on an EBITDA basis.
Of course.
Once they strip out
fake earnings,
tens of billions of dollars in debt that they have. Let's put that to the side.
This is fine.
They believe they're profitable.
Okay,
but
they believe.
Yeah, they believe it. Yeah,
We believe we are.
They've done some financial engineering, and they've found a way to make that number not have a negative sign in front of it. So that's what I would say.
It's handy phrasing. We believe we're profitable. It's look, we believe we're the best podcast on the planet.
Yeah, I'd believe it.
We're not committing to anything. We're not saying we are the best podcast, but we're saying we believe we are.
Yeah.
I think so.
Yeah.
I could be wrong, but I mean,
if I think about that for a second, I'd say so. Maybe. Don't think too long.
Don't think too long. All right, Hamish.
Tell me about Bitcoin. What's going on? What's Trump doing? Trump and Bitcoin.
There's been a lot of chatter around, if these kind of right-leaning politicians get in, whether they are going to start building up a strategic reserve, the US building up a strategic reserve of Bitcoin, which I find kind of interesting. And what's his name? Robert Kennedy? That's his name, isn't it? Yeah, Robert F. Kennedy Jr. He did a talk at this crypto convention, and he said that if he was elected president, then he would build up a sizable Bitcoin reserve for the United States, which seems crazy to me. So all eyes were then on Trump to see, like, would he say similar stuff? So anyway, I'll stop giving my half-assed view of the topic, and I'll actually read the article. So it says, former President Donald Trump stopped short of promising to establish an official US Bitcoin strategic reserve currency during his Saturday keynote speech at the biggest Bitcoin conference of the year. Instead, the Republican presidential nominee pledged simply to maintain the current level of Bitcoin holdings that the US has amassed from seizing assets from financial criminals. So it's kind of interesting. The US is just inadvertently, they're just sitting on a big pile of Bitcoin from confiscating it from criminals.
Yeah, I never thought about that, actually. It's so odd.
Yeah, it's pretty funny. It says, quote, "For too long, our government has violated the cardinal rule that every Bitcoiner knows by heart, never sell your Bitcoin," Trump said at this year's Bitcoin conference in Nashville. You can tell he's catering to an audience, can't you? Quote, "If I'm elected, it will be the policy of my administration, United States of America, to keep 100% of all the Bitcoin the US government currently holds or acquires in the future," he said. Trump's strategy of permanently holding your Bitcoin stake through both bull and bear markets is strongly encouraged within crypto circles, though it is not the US government's present approach. Currently, the US Marshals Service regularly auctions off Bitcoin as well as other cryptocurrencies held in the country's coffers, such as Ether and Litecoin. These sell-offs can sometimes trigger drops in crypto prices, like earlier this month when Germany began to liquidate hundreds of millions of dollars worth of Bitcoin it had seized. I find that quite interesting. And like you said, it's something before I saw this article I'd never thought of, but they're probably sitting on quite a bit of Bitcoin and other cryptocurrencies. But the policy for now is that they just slowly sell it and just filter it back into the market.
Yeah, which is what I would assume they would have been doing. That makes sense.
Yeah.
So it's just funny in my mind, just imagining there's like a department in the US government that's like selling Dogecoin. And like, how much of that Shiba did you sell? Like they have to deal with like,
oh, we should have done that later today. We would have got a better price for it, I reckon.
It's ridiculously named cryptocurrencies.
Yeah. Who's buying sheep? Shiba Inu coin, anyone? Quick. Anyway, it says here, Trump's proposal was less revolutionary than some crypto enthusiasts had expected, and it failed to match the more sweeping pitch of third-party presidential candidate Robert F. Kennedy Jr. Kennedy went further than Trump, promising to establish a 4 million Bitcoin strategic reserve to match the country's current stake in gold, some of which is held near the military base at Fort Knox. The independent presidential candidate said he would sign an executive order directing the US Treasury to purchase 550 Bitcoin a day, an act that would starkly alter how the cryptocurrency is regulated and valued. I mean, that sounds crazy to me because we kind of have the take of, crypto doesn't really have intrinsic value.
Yeah.
But I guess... I mean, maybe it doesn't have intrinsic value, but I guess the story kind of does change if the US government says, no, we're going to build a strategic reserve of Bitcoin. Like the US government says, we are going to hold a lot of the Bitcoin in the world.
Yeah. I think it certainly adds a considerable amount of validity to what Bitcoin as a store of value. Because I mean, that is... there's obviously an enormous historical context to gold, but in part, it's just kind of this group consensus that it has value.
Yes.
In the same way that there is some group consensus now that Bitcoin has value.
Yep.
And so
that the US dollar has value.
Exactly. Yeah. So yeah, it certainly would add a considerable amount of validity to Bitcoin, and the more that there is, then the more value it has.
It's an interesting change if that were to happen, because it would be backed by the US government, because they're backing it,
Yeah.
Not backing like a currency by it, but they're backing the cryptocurrency by the fact that they'd hold so much of it. Like they don't want it to go down if they hold so much of it.
True.
Yeah.
Yeah. It's interesting.
It's interesting. Can a president unilaterally launch a Bitcoin reserve, Hamish? That is the question that people are asking. And the answer is, in short, no. An executive order would not be enough to bring a US Bitcoin reserve into existence. A president would likely need new legislation and congressional approval to push it through. Some lawmakers have kicked off that process already. Shortly after Trump's headline speech at the Bitcoin conference on Saturday, Senator Loomis of Wyoming announced her plan to introduce new legislation that would support a strategic Bitcoin reserve. Quote, over 5 years, the United States will assemble 1 million Bitcoin, 5% of the world's supply, Loomis said. And that will be held for a minimum of 20 years and can be used for one purpose, reduce our debt. Interesting. I don't know.
Okay.
I don't know about that. So how would the US fund a Bitcoin reserve?
Yeah, that's the question I was going to ask. Like, where's this money coming from? Like, are they selling gold? Are they printing? Like, how are they coming up with this?
Well, Hamish, let me tell you.
Yeah, tell me.
The US government has an accumulation of Bitcoin assets that it hauls in from financial criminals in high-profile sting operations. We know that. That existing Bitcoin stockpile could act as the foundation for a Bitcoin strategic reserve. Yep, we get that, which the US government would build on by regularly buying a certain number of Bitcoin. Yes, we get that as well. Those additional Bitcoin purchases would likely be paid for, at least in part, by US taxpayers.
Woo!
Standard applaud.
And because the US is in deficit, it's debt.
Yeah. USA.
What did this guy say? You're going to buy 1 million Bitcoin to reduce the debt. And the way they're going to pay for it is with debt.
Hamish.
Hang on.
That sounds like a great idea.
That sounds like logic.
That sounds like we should do it. Oh, wowee.
God.
Per Senator Loomis's proposed legislation, which is due to be introduced in the coming days, a Bitcoin reserve would be paid for with, quote, existing funds of the Treasury Department, whatever those existing funds are, which includes tax revenue. But yeah, that was my question. Because they don't have any money. Like, they run a deficit. So
could you imagine if they bought 1 million Bitcoin? What is that, like 70 billion US dollars or something? And then it just dropped 50%. Whoops.
Oh my gosh. Oh, wow. Wowie. That would be something.
Oops.
That would really.
We just lost $30 billion.
Oh, well. The ultimate goal would be to reduce the federal deficit, Loomis said at the Bitcoin conference. Which could potentially offset the initial spending. I don't know about this, Hamish.
Doesn't sound.
It's
super. Sounds like. Sounds like something FTX would cook up. It sounds like a Sam Bankman-Fried.
Sam Bankman-Fried's sitting there. Listen. Okay, strategic Bitcoin reserve for the U.S. government. Hey, Trump, you like it? You like that idea? It's a good one, right? Yeah, you should do it. And FTX can carry that out for you. So yes. Yeah, no, I don't know about this.
They just buy Bitcoin and then reduce their debt. Yeah. It actually sounds like that clip. Have you seen that clip of Sam Bankman-Fried talking about his FTT token? And he's like, yeah, we just have a box and you put money in the box and then you pull more money out the box. And the other guy's like, that's a Ponzi scheme.
Yeah. So bad.
Yeah.
It's so funny how many of these crypto guys like on YouTube and stuff even, don't really know what a Ponzi scheme is. Yeah. And when they get asked to talk about their crypto schemes, they just describe a Ponzi scheme.
Yeah,
but they don't realize that they're just describing a Ponzi scheme.
They just accidentally describe a Ponzi scheme.
Yeah, they do. Yeah. And then there's one of them where the host is like, that's kind of like just a Ponzi scheme. And then the guy's like, no, I don't think so. No, because blah, 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 like just starts talking.
Who's Ponzi again?
Yeah. Mr. Charles who? Anyway, what would happen to Bitcoin, Hamish? The article says a Bitcoin reserve would grant the digital currency an even greater level of legitimacy. I tend to agree with that if the government stands behind it. Building upon the momentum of Wall Street's growing adoption of the digital asset. In January, spot Bitcoin exchange-traded funds went live on the US markets. Yeah, we spoke about that for the first time. With the blessing of the US Securities and Exchange Commission, many viewed the listing as an event that cemented Bitcoin's place as an asset class that is here to stay. Still, launching a national reserve would be a stunning promotion for the adolescent currency, which launched in 2009 and has since been characterized by volatile performance with occasional windfalls for its investors. Trump himself was a naysayer of Bitcoin as recently as 2021 when he called the currency a scam.
Shocker.
Yeah, shocker. In the short term, Bitcoin's new status would send the price of cryptocurrency soaring. I probably agree with that.
Yeah, I would definitely agree with that.
Yeah. If the US is buying a lot of it.
Yeah.
If the US government built, quote, if the US government built strategic reserve, then likely other countries would. and that would pull a whole bunch of Bitcoin out of the market, said Marathon Digital CEO Fred Thiel. And then that drives the whole price. So interesting. For now, Bitcoin is holding steady around $68,000 as markets shrug off Trump's promises on Bitcoin, which were far less aggressive than anticipated. Dun, dun, dun.
There you go.
Pretty hectic.
Yeah.
Do you think this would ever actually happen? Even if Trump promised,
I don't know.
Even if Trump, okay, let's say in the next 5 years, 5 to 10 years.
I think it's unlikely.
Yeah. I think so.
But I would have said a lot of things that have happened to Bitcoin were unlikely.
That's
I would
true.
have said it would have been incredibly unlikely that it went past $50,000 is now what near I think over 100,000 Australian dollars.
Yeah.
I would have said that would have been incredibly unlikely. I would have said, the SEC approving ETFs for Bitcoin would have been incredibly unlikely. So, I've been wrong on cryptocurrencies. They've been able to build momentum, and that's all that's what it needs.
What it needs.
It needs momentum. And it's been able to maintain it. So, I don't know. In the next 5 years, I would say that's unlikely that the US does that. But super long term, who knows? Maybe, it's definitely a possibility that Bitcoin genuinely becomes the new gold. Like if you looked 300 years into the future, they will look back and say, oh yeah, they used to use the actual, chunks of metal. Now we just do it digitally. That's a real possibility. It seems crazy. I would still say that's unlikely, but as I said, I'm wrong. I've been wrong on this a lot. So
Yeah. Well, that's all I had to say on this strategic Bitcoin reserve, Hamish. Now let's move on to our most riveting topic of the day.
Yeah, thank you. Yeah.
Bonds.
Let's talk about bonds. Yeah, so not traditional bonds, actually. I want to talk specifically about convertible bonds. They're on the rise again. 2024 has been a year where markets have certainly been frothy, I think is a reasonable way to... that's how Ray Dalio described the market. I love that word because I feel like frothy is like, especially from an Australian perspective, it's like an Australian... It feels like an Australian term. It's frothy markets.
Yeah, it's absolutely frothy.
And so we've seen things like the IPO market come back in a big way, right? So a lot of companies looking to go public, capitalize on the fact that there's a lot of money going into the market. And one of the things that's kind of been coming back this year has been convertible bonds. And so, when you think about financial markets, if you asked, any person, what are the two kind of main securities in financial markets, people are going to say stocks and bonds, right? It's like the classic, what should my portfolio look like? Should it be 60-40 stocks and bonds? It's those are the two main securities. There's actually a third type that actually just combines stocks and bonds, and that's a convertible bond.
Right.
And kind of that's what's been on the rise this year so far. In 2024, so far to July 17th, US companies have issued $48.6 billion of convertible bonds, on track to be the sixth biggest year for convertible bonds since 1995.
Right.
So it's this year so far, it's been a big year for this particular type of security. What is a convertible bond for maybe people who aren't super familiar? Well, essentially they act like a bond. So investors earn a fixed interest rate. So it's a bond is essentially a company borrowing money, but that's kind of the financial security that represents it. So if you buy a bond, you're essentially lending money to a company and earning a fixed interest rate. It's like you're acting like the bank on if you got like a home loan, it's like you're being the bank essentially. You're earning the fixed interest rate. You're outlaying the initial funds and then getting the interest rate back.
But that's fixed.
It's a fixed rate. And that's what a normal bond is. A convertible bond does that. However, if the share price rises above a certain amount, then it converts into stock. And so it's convertible. It's a convertible bond, right? So it essentially allows an investor to earn a fixed stream of cash flows, but also allowing them to essentially become a shareholder if the company rises in value. So it allows them to benefit from the upside as well. Whereas if you just bought a bond and it says 4% on it, and then let's say the company grows in value by 50% a year, it's in NVIDIA, for example. Let's say you owned NVIDIA bonds. I don't know if they even have debt, but let's say you owned NVIDIA bonds. you've earned 4 or 5% per year, while the shareholders have earned whatever the hell they've earned over the last 30,000% over the next last
10 million percent.
Exactly.
Yeah.
And so convertible bonds are actually really attractive to both investors in a lot of cases, and also companies. And they're attractive to companies because they're really cheap, right? So from a company's perspective, from our perspective, when we buy stocks and bonds, we're looking at the return that we're going to make and the risk and that sort of thing. When companies are selling these securities, the interest rate is a cost to them. They want capital, they need money. I need to get investment from you, and so convertible bonds are really, really cheap, and they're often used by unprofitable kind of smaller companies. So, for example, the average coupon rate, so this is kind of the interest rate on a convertible bond issued this year, was just 2.6%.
Oh,
so the fixed interest rate on these bonds to the company is really, really low.
right.
And if you compare that to the rate on junk rated bonds, so just traditional bonds for unprofitable companies, essentially, that was 8%.
Right.
So if you're an unprofitable company, like we're going to talk about Lyft and Snap, if you're Snapchat and you still haven't figured out social media somehow, then you've got a kind of a choice. You can borrow money at 8%, or you can create a convertible bond. You're borrowing money at 2.5%, but then of course you're giving them the option to convert that into stock.
Right. Makes sense.
And as I said, investors are willing to accept kind of a lower interest rate because they kind of benefit from the higher return if the company grows.
I've never really looked into convertible bonds. I imagine that they just be turned into stock whenever, because there would be a price of the stock rising where you'd be like, oh, okay, now it makes sense to turn it into stock.
Yeah, exactly. So essentially there will be kind of a price, there'll be kind of a sticker price, on the convertible bond.
Yeah.
And so if the share price goes above that and you convert it, then
you're winning.
Then it actually has value. Otherwise, in the same way that if you
Like
bought
in
like
the money or out of the money.
yeah, exactly. If you bought like a call option,
Yep.
If it doesn't go above the strike price, the purchase price,
Yep.
Then it's worthless to you.
Yep. Interesting. Yeah, cool.
Yeah. And so there's been quite, as I said, it's kind of been the 6th biggest year for convertible bonds since 1995. Almost $50 billion in bonds issued already this year, so on track to do over 100 billion or close to 100 billion this year. And two of the biggest companies and most notable companies doing this are Lyft. So in February, the ride-sharing company Lyft issued $460 million worth of convertible bonds. And so these bonds are due in 2029. So what is that, like a five-year term? The interest rate on this is 0.6%. So you're earning a very, very small fixed rate.
Right.
And then they can be converted into stock if the share price hits $21 per share. And the share price at the moment is $12 per share. So that gives you kind of a window into kind of how it works. So if you invested in this, your fixed rate is very low, 0.6%. But the stock only has to double in price for it to for that bond to convert into stock.
Only has to double.
Only has to double. Yeah, exactly. Just a measly double. Yeah, exactly.
Right.
So that kind of gives you an idea. So that's kind of an example of like a convertible bond that's more, it's like closer to stock than it is to debt, because the interest rate is very, very low.
Yeah.
And it is, I say only a double, but it is a very small company. So
it could do that.
If it does double, if the company just kind of proves itself essentially,
Yep.
then it's like you just bought stock in the company essentially. And then as I said, Snap, the company that owns Snapchat, was also a big one. They issued $750 million worth of convertible bonds due in 2030 that pays 0.5% a year, so even less. And shareholders can turn those bonds into stock if Snap's share price reaches $22 per share. And at the end of last week, the share price was $13 per share. So it only has to go up 50%.
Right. I'm trying to think. So do convertible bonds they'll dilute shareholders?
Exactly.
Right.
Yes.
Okay.
Yeah.
Interesting.
And so,
So there is a kind of that consideration to make. There is, I guess, a cost to it. You don't want to do it too much and annoy your shareholder base, I guess.
Exactly. And that's why particularly kind of small, unprofitable companies, it tends to be quite popular because it's not popular to the shareholders to say, hey, we're going to issue 500 million new shares and you're going to be diluted.
Right.
But if they say, hey, we're raising debt, it's convertible, but
we're going to sell some bonds.
Yeah.
What type of bonds? Sorry, I can't hear you at the back. Anyway, moving on.
Then it does kind of ease that pressure a little bit.
Yeah.
For the existing shareholders being diluted.
Yeah, there you go. I don't know much about convertible bonds, truth be told, but that's quite interesting.
Yeah.
What an interesting world. So there you go. Lift and Snap. Are you a shareholder of either, Hamish? I can't imagine you would be.
No.
Doesn't quite tick the boxes for you.
No, I won't be buying a 0.5% convertible bond. No.
Oh, Hamish, that's a good return, mate. Come on.
Yeah, what a shocker.
Well, there you go, Hamish. I think with that said, that is everything for today, is it not?
That is everything. Yeah, we're done for time. Yeah, wow.
Yeah, we've been going for an hour.
Perfect.
It flies, doesn't it, when we're in the heat of it?
You know, it is funny because with my current setup, I don't know if this ever comes through in the video, but I have the audio recording behind me. Yep. So I literally have to turn around and look behind me to check how long we've been going.
Yep.
Whereas at least today, I could see it right there.
I know my job.
Yeah,
I know my job is the timekeeper on the podcast regularly, so I keep an eye on that.
Yeah.
I might hurry you along sometimes or slow us down a bit. Yeah.
It's enough on bonds, mate.
Well, Hamish, that's very interesting. Okay. Switching topics. But no, that's it for today, guys. You are going to see us like this quite a few times over the next weeks or two because we are going to be recording another couple of episodes, so definitely stay tuned. I think there'll be extra episodes though, maybe coming out midweek, just for a couple of different topics that aren't just straight news, but we'll be doing our news ones as always from week to week. But look out for those extra episodes. But with that said, I don't know. Thanks for joining me today, Hamish.
No worries.
I'll see you in 2 minutes when we start the next podcast.
Yeah.
But no, I should say thank you guys for joining us as always. We really appreciate it. And definitely leave a like or leave a review for the podcast. All the 5-star reviews really help. But with that said, appreciate it, guys. And hope you enjoyed the episode, and we'll see you guys in the next one.
See you guys.